Okay, so we're coming to the final part, the final stretch. Moving on to next topic. I find it very exciting. Cryptocurrency. I think, and I checked this morning. Well, it might have been last night. I think globally, crypto assets are 1.7, 1.8 trillion. Of course, because of fluctuation that can go up or down. We have two highly accomplished brothers who are going to have this discussion, kind of an informal chat on the theme of what's the buzz in crypto. Both have tremendous credentials. Brother Ali Hassan is in New York. He's worked on Wall Street. He's former Goldman Sachs. He's been a serial entrepreneur and has had very good success in crypto investing. And with him is brother Motasem Benothman, who's in beautiful Orange County. A lot of success in real estate, from what I heard from my contacts, and then he pivoted to cryptocurrency and is very excited about cryptocurrency and runs a fund. Brother Ali Hassan runs Perceptive Capital. Brother Motasem runs Portola Springs Capital, if I'm getting that right. And I think between the two of them, they manage well over eight figures in assets. And I think they're great value adds. They've spoken in the past at a Halal Money Expo when we did the original one. So very excited to have them back. Brother Motasem, I remember last time you mentioned crypto is not dead because I think Bitcoin was in the 20s. Now it's past 50. I think you should be smiling from year to year. But with the halving coming, I think this is great timing. Again, we'll put a disclaimer. I just want to reiterate, we're not here promoting something or saying investing or whatever. This is discussing trends, sharing some perspectives, etc. What I ask from the community is, hey, do your research on crypto, right? Don't write it off. If there's some who are big believers, but do your research, read up about it, watch it, track it. I want to quote Michael Saylor, went to MIT, heads MicroStrategy, very successful. He says investing in Bitcoin is like, what if you had a chance to buy real estate in Manhattan 200 years ago, right? If you had that opportunity, how many of you would do that, right? So Bitcoin is something like that, right? And this is Michael Saylor, right? So today we have Motasem and Ali. We'll have this discussion on crypto. Hopefully that'll enlighten you, and we'll take it from there. So without further ado, I'd like to give the floor to our brothers Motasem and Ali. And thank you so much for joining us.
Yeah, great. Jazakallah khair Tanveer, and assalamu alaikum, everyone. I'm Motasem Benothman, and as you can see, Ali is with me. So with our two funds, just so you know, they're basically crypto-only funds, and the intention of these funds is to allow investors to get a diversified portfolio of crypto exposure without all of the burden that comes with kind of understanding the crypto market and dealing with security and taxes, etc. But note that anything we discuss today is not considered investment advice. Ali, would you like to say anything before we dive into some questions?
Yeah, just thank you again for hosting us, Tanveer. That's when I did this. I don't remember if it was 1 year ago or 2 years ago, and always happy to be invited back. The price of Bitcoin today is a lot higher than the price of Bitcoin when Motasem and I first started talking about this a little while ago. So it's always good to remember that what we talk about is not investment advice. It's our opinions. We're not really representing our funds in any capacity here. We're just sharing what we can as a way of sharing with the community some of our knowledge about the crypto space.
So what we'll do today is we've put together some commonly asked questions that we'll just ask each other to opine on, and then we'll try to leave some time in the end to answer your questions. So first question I'll ask Ali is, what is the impact of the Bitcoin ETF approvals?
Yeah, that's a great question, Motasem. It's been the golden goose that we've been chasing for a very long time in the crypto space. We've been talking about a Bitcoin ETF since I first started. In fact, I tried to launch a Bitcoin and Ethereum ETF in 2018, so a little bit too early per the SEC. But it is something that really legitimizes the space. It makes it much easier for investors like you on the phone today, our parents, institutions, large asset managers to be able to get exposure to the Bitcoin specific space without having to worry about wallets or exchanges or hacks. It becomes as simple as buying a stock or any other ETF. Today, there are 11 ETFs that are approved for spot trading in the space. They represent almost $30 billion in assets. This is a huge growth. In fact, it's the second largest commodity represented by ETFs in the world, second only to gold. And gold, mind you, is a $90 billion asset class. So in approximately a month, we've been able to capture a third of gold's entire AUM represented by ETFs, and we're 3 times as large as silver, which is approximately $10 billion. It is massive, massive demand for Bitcoin. One thing to remember is that Bitcoin is a finite asset. There are a finite number of coins, 21 million coins. Every single time an investor comes into one of these ETFs and buys the ETF, the fund manager has to go out and buy the Bitcoin in the open market. That takes more and more Bitcoin out of the circulating supply and locks it up with these custodians that manage the funds on behalf of these ETFs. This is driving demand and squeezing supply. So it's making it a really interesting investment for the future, obviously my opinion. We're squeezing the supply, we're increasing the demand, we're making it easier and easier for institutional buyers and retail buyers to access. It's nothing but a good thing. And finally, I'll end with Motasem, just to be conscious of the time. We only have 11 today, but there are large asset managers who didn't want to be first movers, Schwab being one of them, with billions and trillions of dollars under management, who are itching and waiting for the opportunity to launch another fund. These funds are now competing on price, reducing their fees in order to attract more and more inflows. And as demand for these products continues to rise, you will see other asset managers who will issue more funds and gobble up more Bitcoin, and obviously increase the price of Bitcoin for everyone who is an early participant.
All right, thank you, Ali. So the next question we'll cover is
Yeah, I got you, Motasem. What are some of the catalysts that you see for 2024, Motasem? Is there anything that's exciting for you, obviously, besides the ETF that you're tracking either in your fund or your personal life? And what are you talking about with your friends these days?
Yeah, actually, as some of my investors know, the last couple of years I've been basically telling just wait for 2024 and inshallah 2025 as well. Basically, there's a lot of potential things. First was the Bitcoin ETF that already happened, but the impacts of that ETF are going to take some time to benefit from. So we've already seen some great numbers like Ali has covered, but what happens in the world where most of the flow we've seen so far with the ETFs are people acting independently with their money, right? So they're moving their money to buy Bitcoin ETFs. There's a large pool of capital that is managed by registered investment advisors and basically these banks, and they advise their clients on where to invest. So these RIAs, these registered investment advisors, typically will not make recommendations unless an asset has been on the market for a decent amount of time, say 6 months to a year. Once it's a little more seasoned, then they can go to their clients and say, hey, this Bitcoin ETF has been out for a while. We've been researching it and tracking it, and it's performing well. We recommend you allocate a certain percentage of your portfolio to that. So that's likely going to start to kick in the second half of the year, and that will drive more flows into Bitcoin, inshallah. Another big point, which Tanveer hinted at, was the Bitcoin halving. So that's scheduled for May. And what happens there is basically Bitcoin's inflation rate gets cut in half. So right now there's about a 1.8% inflation rate of Bitcoin, meaning there's 1.8% of new Bitcoin that get created per year. And every 4 years, that frequency or that inflation gets cut in half. So that fourth year is basically now, and in April it goes from 1.8% to 0.9% inflation, and that makes it have a lower inflation than gold. And then Ethereum, by the way, is already pretty much at 0% inflation. So that creates kind of the top 2 crypto assets to be near zero inflation, and that should be a big factor. What we've seen historically, there have been 3 halvings so far, and with all 3 of them, the year after the halving have been phenomenal years in the market. So inshallah that continues, and that's leading to a lot of excitement for the year. And then another item is there were a lot of, over the last 2 years during the bear market, there were a lot of bankruptcies and things like that. And that created some assets that these bankruptcies have, crypto assets that they're going to sell. They've already started to do that over these last couple of weeks, which includes kind of why the price is tapered off, even though the Bitcoin ETF was approved. But then that will likely continue to happen over the next few months. So in the second half of the year, most of that bankruptcy selling should be done. And also some of that selling gets distributed to the claimants as cash, and then those people who are already crypto kind of enthusiasts will use that cash to buy crypto. So that's another potential flow. So it's stopping the selling and adding some new buyers. And then lastly is we're expecting a few decreases in interest rate cuts this year. And that's going to be, inshallah, a big kind of stimulus of taking more risk in the market. We saw that in the bear market with interest rate hikes driving the bear market, because what happens is when people have, when there are high interest rates, it's easy to just kind of take a no risk exposure and just buy bonds or savings accounts, and you get 5%. So it's kind of like, all right, that's a decent return. Let me just put it there. But as rates go down, then people need to start taking more risks with their money to get a return. And that's what stimulates risk assets. So the next question we'll cover for Ali is how should we look at crypto as an asset class?
That is the question that's important, right? So let's say you agree with Motasem. You think that these catalysts that he's talking about are real. You trust his opinion. We're going to have supply shocks in the form of Bitcoin halvings, demand shocks in the form of Bitcoin ETFs, and everyone is going to want to buy some of this Bitcoin. How do I, as an investor, think of Bitcoin specifically as a portion of my overall portfolio? And what do we mean by that? Your asset allocation will include things like equities. These are S&P 500 ETFs, stocks, things that you might buy in your portfolio. They may include things like bonds for most investors, not so relevant in this conversation as we are all Muslim and we don't invest in fixed income products. They might include real estate, might include venture capital, private equity. What I argue is that it should also include an allocation, a thoughtful allocation to crypto. Whether that's Bitcoin only or crypto overall is up to you. My opinion is 5 to 10% of a liquid investor's net worth should be in these crypto assets. Obviously that's a wide range. You're looking about 100% range from 5 to 10%. And that's primarily driven by risk appetite and age. The older you get, the more likely you might have a need for that capital. You might need to retire based on that capital. You would obviously want to decrease the amount of crypto holdings you have. The younger you are, or the younger of a person you're setting up a portfolio for, whether it's your kids, nephews, nieces, whatever it is, they may be more willing to take on more risk in their portfolio. They have the benefit of time, and time really is the most important factor in allocating to risk assets. They might be willing to do 10+%. But overall, my rule of thumb is 5 to 10% of investable net worth in crypto. You may want to do it directly by buying the Bitcoin on your own, having a wallet, or an exchange account. That's my preferred method. It allows you to move with it anywhere in the world, to have access to your capital on a moment's notice. Or you might want to take an easier way out. There's absolutely nothing wrong with buying the ETF. It's super cheap. My recommendation is the Fidelity ETF. It's one of the lowest fees at approximately 25 basis points. It's super simple to buy. I also recommend Fidelity besides and instead of all the other ones, is because they are the only one who does the custody on their own. They don't rely on Coinbase as the custodian. Almost every single other ETF relies on Coinbase. There's nothing wrong with Coinbase, of course, but it's a major choke point. If that is the point of where every single other institution is holding their Coinbase, it's a honeypot. It's a big target, of course. It doesn't hurt to be somewhere where slightly different. Obviously, Fidelity is one of the largest and oldest asset managers in the world, very well trusted. They mine their own Bitcoin. They've been very pro Bitcoin for a very long time. So if you leave this conversation and you hear about 11 ETFs and you're wondering which one should I put that 5 to 10% in, my recommendation is the Bitcoin ETF, obviously as non-financial advice. But that's what I do for my family. That's what I do for my kids. And I'm happy to obviously share those thoughts with others. Motasem, what are some blockchain use cases? We spent a lot of time talking about Bitcoin. We hinted a little bit about Ethereum. But besides investing and making money and chasing speculative assets and risk assets, what are people actually using these blockchains for these days?
Yeah, I think in terms of product market fit, crypto is still very early. We're still in the nascent stages, right? So I would say there are only 2 use cases that are currently kind of have achieved product market fit. And one would be Bitcoin store of value use case, which is basically an alternative to gold. And you think of that as kind of digital gold. And given that it's a much smaller market cap, it is potentially has more potential to grow and eventually reach gold size. And then the second, which is huge, but we don't feel as much here in the US, is stable coins. So stable coins are basically cryptocurrencies tied to the value of the dollar. So it's always $1. So USDC and USDT are the two kind of biggest stable coins, and they're always $1. So you basically get the benefits of being able to transact and send these stable coins to people in different countries and do business transactions or personally loan money to, or whatever it may be, without having to wait, without having to pay wire fees, without having to wait 3 days, without having to deal with the banks. This is especially important in third world countries where they don't have access to one, as much financial infrastructure, and two, don't have access to the dollar, right? So imagine living in a country with very high inflation and you can't open a US dollar bank account. So you don't want your money to just kind of wither away with inflation. So you can instead buy a stable coin and just keep that in your wallet, and therefore you protect yourself from that. So stablecoins have been incredibly successful in the rest of the world. In the US, we don't see it as much just because we have access to everything, and things are generally pretty easy. In terms of future potential uses, we have tokenization is really just a big one, right? In terms of being able to take any asset and tokenize it. So think of people around the world that maybe are low income and just have, a few $1,000s to invest, but they want to get exposure to real estate. That's almost impossible now, right? Yes, there's some crowdfunding opportunities, but those are limited, and those are usually US and European focused, right? So third world does not have access to these things. So imagine basically in a tokenized world, people can buy multi-million-dollar real estate pieces, but then tokenize them into 1 million different tokens. So now with $1 or $2, you can basically buy a fraction of a real estate or buy a fraction of Mona Lisa or whatever it may be. Also, you have basically from a gaming use that money for those skins and transfer that to the new game. So that way there's basically like an ecosystem that can continue to go. Crypto enables is to address the trust problem. And the trust problem is especially more important over the next couple of decades as the world becomes, or as the world continues to deglobalize. We're going to start to experience much more countries not trusting each other. So when certain industries are controlled by certain countries, then you no longer trust those assets, right? And interestingly, we as Muslims in the Muslim community have started to see that even on social media, where we start to see basically pro-Palestine content gets basically suppressed on Facebook, etc. So there are opportunities where things like decentralized social media. So imagine a Twitter that's basically a crypto-based Twitter. Therefore, it's not run by a specific company or an individual like Elon Musk, and therefore cannot control the content there. It's basically decentralized and allows basically the trust factor to be addressed. Additionally, there's things just kind of like market efficiencies, real estate. We talk about escrow, right? The whole escrow process where you pay large fees is really just there to address trust. There's two parties, a buyer and a seller of a real estate, but everyone is agreeing to use this escrow company and pay them a decent amount of money because we don't trust each other. So that can all be solved basically on the blockchain because you can trust what's in the blockchain mathematically. And so those are kind of the main some prospective use cases over the next few years. But it is still a market in its infancy, and it will take time for a lot of these use cases to address. One other comment I want to add in terms of the question about looking at crypto as an asset class. I personally look at Bitcoin as an alternative to gold, but the rest of the crypto market, the thousands of other cryptocurrencies like Ethereum, etc., those to me are tech investments, right? Like I see that as basically we're entering a Web3 stage, and we're basically about to have, this is kind of like the .com boom kind of done again, where we have these technologies that are still not ripe, but you have a unique opportunity of being able to invest in them at a very early stage before they reach product market fit at a lower valuations. So the next question we have for Ali is, everyone is talking about Bitcoin. Is there anything else we should be looking at?
Yeah, I do get this question a lot. Everyone says, "Hey, I missed Bitcoin. I missed Bitcoin." And someone told me to buy it when it was $800. Someone told me to buy it when it was $20,000. I missed it. What else should I buy? I can't buy a whole Bitcoin because it's $44,000, and I want to buy something where I can get a lot of units of. These are pretty common questions that both Motasem and I get, and unfortunately, the answer is not what people like to hear. We still really do believe in Bitcoin. We still think that the best is yet to come for Bitcoin. The numbers don't matter. 10% increase on a $40,000 asset is the same as a 10% increase on a $2,000 asset. That being said, there are other things that I do like to look at. The most common and most simple one that I can recommend with sincerity is Ethereum. And there are two main catalysts that made me want to recommend that. The first is the same theory that I had of why we should buy Bitcoin is to front run the rest of the world. Most people were still debating on whether Bitcoin is a fad, it's magic internet money, the government is going to regulate it away, it's going to get hacked. All these things were the excuses that you might have said to yourself as to why you didn't buy Bitcoin. And we were telling people that in the not too distant future, there's going to be an ETF for it. That happened. I believe the next big brain move to figure out what is the next thing that is we're going to be able to buy easily. What other barriers to entry are we going to take off? And it's probably going to be Ethereum. The CFTC already has Ethereum-based futures products out there. That's the same thing they did with Bitcoin. They launched the Bitcoin futures products not too long after they launched the Bitcoin ETF. It is not absurd to think that given the treatment of the CFTC for Ethereum, the SEC will soon, who knows what soon looks like, start to view Ethereum the same way and allow an ETF to happen. If you believe that to be true, then it might make sense to front run the rest of the world and allocate money to Ethereum so that when the ETF happens, you are one of those people that the ETFs are buying from. It's always important to think that way, right? Not what people are buying now, but what do I believe people will be buying in the future? The most simple, easiest, the safest, lowest in risk relative to Bitcoin is Ethereum. The second reason why I recommend Ethereum is it's a yield producing asset. So there's plenty of investors out there. We kind of touched a little bit about fixed income and how we as Muslims don't necessarily invest in fixed income products. There are plenty of investors out there who are starting to look at Ethereum as a fixed income product. It generates a yield, and this yield has nothing to do with riba, has nothing to do with interest. It's a yield that's based on the amount of network activity. So the more people use Ethereum, the more Ethereum spits out in the simplest way to think about it is a dividend. It's not really a dividend because there's no stocks and there's no profits. Simply put, if you own Ethereum, the more people use Ethereum, the larger a dividend you're going to get. It fluctuates between like 4 to 6%. There are plenty of investors out there that just seek yield. This is according to many ulama that I've spoken to, according to many shuyukh who understand these concepts, it is a non-haram way to access yield because it has nothing to do with riba. So if you agree with that and you are looking for yield, if you're looking for cash flow, you're not really going to get that cash flow on Bitcoin. You will get it on Ethereum, and there's plenty of investors that are going to want to buy Ethereum for that cash flow. Which is why besides Bitcoin, I always recommend Ethereum. Highly recommend to get an allocation to Bitcoin before you do Ethereum. And if you do have the opportunity to have both, it's going to be worth it, I think, in the long term. Tanvir, does it make sense? I'm looking at the time here now. It seems like we only have 5 minutes left or so. Should we open it up to some guest questions?
No, you can continue for a
Audience
couple more
questions?
minutes and then we'll do Q&A, okay?
Okay. Motasem, a topic that a lot of people worry about. Will the government shut all these things down? What is the regulatory landscape looking like for crypto?
Yeah, first let me make a couple comments regarding Ethereum and yields. One is as far as the Ethereum ETF goes, there's a very important SEC approval deadline in May. So there are decent odds that that could be approved in May. If it does not, if it gets rejected in May, that likely will trigger a lawsuit and potential delayed approval in a year, 12 to 18 months after that. But there are a lot of people with high hopes for a May approval. Secondly, as far as getting a yield on Ethereum, if you do purchase Ethereum, note that you don't yield just by owning Ethereum. You have to actually stake it, which takes a couple more extra steps. So, but there's a lot of content online on how to do that, or reach out to Ali or myself if you need advice there. And then thirdly, as far as yield goes, we actually have since generally Muslims avoid interest-bearing items, there is an interesting opportunity for individuals with Coinbase today, or this year, where they have basically a yield-bearing instrument for saving USDC on your Coinbase account. So right now they're giving 5.1% per year if you save USDC in your Coinbase account. Normally, that's an interest-bearing vehicle. In Coinbase's case, at least the way I understand their setup, it's actually a marketing distribution. So they're encouraging people to put money on their accounts because they think that will eventually lead to you buying crypto. And as a result, from their marketing allocation, they're paying out that 5.1%. They're not actually taking your money and investing it in bonds and then paying you some of those results. So to me, that is one of the very few low-risk yield-bearing Sharia compliance instruments, and I'll try to share the link with you guys. Actually, it's just coinbase.com/USDC. So back to Ali's question about the regulatory landscape. It's certainly a mixed bag. I would say for the rest of the world outside of the US and some countries in Europe, the regulatory landscape for crypto is actually very favorable. You have a few countries such as the UAE, Hong Kong, Singapore, and even UK are both becoming very crypto friendly and enacting new laws that are encouraging crypto companies to come build in their residencies. In the US, we have a mixed bag. The FTX bankruptcy certainly set the industry back quite a bit. And then we have some specific players such as Gary Gensler, head of the SEC, Elizabeth Warren, and Janet Yellen. Those are kind of like they're crypto's axis of evil, and like they're kind of anti-crypto. Odds are pretty high that Gary Gensler will no longer be head of the SEC at the end of this year. So that will likely change to a more favorable result. And then also, given just kind of the demographics of young people being pro-crypto, old people not understanding it and thinking it's for criminals, over time is in our favor, right? As more young people get in office and more young people vote, that shifts the landscape to become more crypto friendly. And then lastly, we as Muslims obviously have many things to consider when we vote, but if you look at things purely from a crypto landscape, the Republican Party is certainly more favorable for crypto. So if there are more Republican seats and potentially even presidency, that should be a much more favorable position for crypto over the next few years. Democrats I would say, are half and half. Some are anti-crypto, some are not. So we'll just have to see how the next few years play out. But the fact that no major regulations have been enacted thus far, I think is a good thing for crypto just because of the timing playing in our favor. So we'll have to wait and see. But then also note that the ETF plays a big role in this, right? In terms of just legitimizing crypto, it becomes a much harder story for people to say crypto is basically for bad people and criminals or whatever, when you have companies like Blackstone, et cetera, pitching ETFs and Fidelities and so on. So I think this is the year where you'll start to see the stigma of crypto start to fade away from the general public, inshallah. All right, so Tanvir, should we shift into questions?
This has been a riveting conversation. Thank you so much. I want to clarify something, right? When it comes to crypto, it's probably the scariest asset because different scholars have different opinions, right? Like, some scholars, yes, it's permissible. Some outright no. Some like, hey, proceed with a lot of caution. Right. And then there's different aspects. Right. So I think everything can be debated, etc. We have, I'm not sure if you probably joined a little later. We started our day with a beautiful fintech panel on, rise of Islamic fintech. We had a couple of entrepreneurs from Takadao, which is Takaful Insurance on DAO. So one of the comments the sister made was like staking, right? Is it even halal, right? She messaged me. So just, what are your thoughts there? And then that could be a separate discussion itself, but let's touch base on this. I have one other question and then we'll wrap up.
Yeah,
I'm
I'll
sorry,
just
may I actually clarify? I know staking in some ways are halal. What I had said to Tanvir is staking ETH as a consensus mechanism is not actually halal today. Now, the act of the consensus mechanism, that is fine. However, because we are not able to censor the smart contracts that are riba based, so we're not allowed to witness contracts which are haram, right? This is the Sharia law. And when you're staking your ETH as a consensus mechanism, what you're doing is you're validating the contracts. So since we do not know what are in the blocks that we are validating today, they might be riba-based contracts. So therefore, staking is haram in that context. Now, however, there are many startups, or at least there's one that I know of, which is working on censoring those blocks, which you can think about in the future. Essentially, they can censor out the non-Sharia compliant contracts. But as of today, that is not this solution. Now, the other type of staking, which we are doing at Tekaturn, which is liquidity provisioning for a decentralized exchange to do swaps. Now, this we know for sure is halal. And actually, we're doing it, and it's for ETH, and APY is really high right now. It's around 29%. But generally, you're looking at 12%, 12 to 15%.
Thank you, Shireen. I think I'll beg to differ in kind of the position on that. Allahu alam, each sheikh will have different opinions. I know there are sheikh out there here in the US that have determined that staking for Ethereum is halal, but I understand there are different perspectives. I guess for me, it's kind of akin to Ethereum is like this building that hosts a lot of businesses, and as an ETH holder, when you stake, you're basically providing the security. So you're basically like a security guard at this building. And if some of the tenants in the building happen to do business that may be interest-based, that's not necessarily you as providing security is not necessarily does not make your job as providing security there haram. But Allahu alam, this is where for each person can make their own individual assessment.
Yeah, sorry, at the risk of sounding argumentative, it's not the correct analogy. The correct analogy is witnessing contracts, because this is what staking as a consensus mechanism is. You are validating smart contracts on the Ethereum network along with transactions, and therefore it's a very direct thing. Anyway, thank you so much, and Jazakallah khair.
We can agree to disagree. So, all right.
Final question, and we, hopefully we'll have an opportunity to, discuss offline. Final question for you, brothers. For a Islamic center or a nonprofit that may have an endowment, right? Do you have any advice as to how they should start thinking of, maybe parking some of the funds, in crypto? What are your thoughts? Are you having conversations with, any of the nonprofits within the community across the country?
I can give you some direct, from our personal Islamic center, we run a Bitcoin and Ethereum program for them, where we are allocating directly on behalf of the Islamic Center as part of its endowment. This is part of the asset allocation plan. They understand the risks associated with investing in these assets. They've been doing it for a very long time, and they get it, right? So it's not unlike any other asset that you can invest in. With every unit of risk you take, you want to be compensated with additional units of compensation. Crypto is a risky asset. That risk gets really bifurcated over any long-term horizon. So the longer you are in the space, the statement of something is too risky, that doesn't actually make sense from the perspective of modern portfolio theory. No asset on its own terms is too risky or not risky enough to invest in. It all depends on the time horizon, the need for the money at certain points. So yeah, I have spoken with them. I've done multiple lectures. I try to give this perspective to as many Islamic foundations and Islamic men and women as I can. This is an asset class that's here to stay. It can be easy to bury our heads in the sand and say, this is too difficult, it's too complex, I don't understand it, I only want to invest in things I do understand. Historically, those who have been willing to take on slightly more risk and participate in things that they might not fully understand have been the beneficiaries of the greatest returns. I don't see that stopping anytime soon. In fact, I believe both Motasem and I think that this is only going to accelerate in the not too distant future. So we still do believe that it's a good time to participate now, and hopefully next year when we have this conversation, we have more people who have participated from our community.
Brilliant.
Yeah, and I think it's important when whether it's organizations or individuals look at their portfolio to assess not only risk directly. So crypto, there's no doubt, is a very high risk investment, but correlations are also important. So when something has low correlation to your other investments, the majority of your portfolio, then that can provide basically that mutes out the potential risk to your overall portfolio, right? So there's, depending on how your portfolio is allocated, you can actually make a very high risk investment and it actually reduce the risk of your total portfolio just based on how the correlations work. So something to consider.
Great. Hey, this was a great conversation. Always enjoy listening to you all. Thank you so much for joining us. We'll be in touch, and hopefully we'll do other sessions in the future, inshallah.
Thank you, Tanvir.
Jazakallah khair. God bless. Assalamu alaikum.